Hello traders, Gary Wagner here. It is 12:40 in Honolulu, 6:40 in New York on Thursday, 12th day of September 2024, and this is the evening report for gold and silver. A phenomenal day for the precious metals with major gains in both gold and silver. Gold gained $47 in trading today and closed at $2,587.20 in New York and Globex. Currently, it's off just slightly from that close at $2,586.70. Silver gained in excess of 4%, a total gain of $1.21 per ounce, taking the most active December contract to $30.21.5. And traders, dollar strength or weakness had very little to do with the dynamic gains in both gold and silver, with the dollar having a fractional gain of 0.19%, taking the index to 101.308. This first chart is the chart that I analyzed and spoke about in our opening letter today. It is a 30-minute standard candlestick chart in which we have highlighted 8:30 in New York, the time that both reports were released. Obviously, the reaction to both reports were noticeably different, with today's PPI report, I believe, showing the culmination of the two reports, as we are now approximately 5 days from the onset of next week's FOMC meeting. In yesterday's CPI report, we had a major move down from $2,550 at 8:30 when the report was released. It closed out the hour at $2,537 after trading to a low during that half-hour period from 8:30 to 9 of $2,531.20. From there, we could see that the incremental moves on a half-hour basis were relatively small, with the vast majority of action occurring within the first half hour following the release of the CPI report. That differs from today's report. This arrow marks 8:30 when the report was released. They both were released by the U.S. Bureau of Labor and Statistics. We could see that coming up to the report, we had incremental gains beginning an hour and a half prior to the release of the PPI report of roughly $3 to $5 per half-hour period. However, once the report was released, we would have strong gains on a half-hour basis, with this first candle opening at $2,548 and 2.5 hours later finishing this last candle at $2,581. In other words, a $33 move in the short period of 2.5 hours. When we convert our standard candlestick chart to a Japanese average or Henkin Ashi chart, we can see the dynamics and strength of the trend on a half-hour basis as it developed. The candle size, because we are fixing the open off of the midpoint of the prior day, accelerates and enlarges incredibly fast over the first 2.5 hours following the release of the report. While gold closed very, very near the highs that were achieved during the first 2.5 hours, gold did manage to gain an additional $4 by the close. The question is, where could gold possibly go as we move closer to next week's FOMC meeting? To that end, I pulled up our daily chart. This daily chart consists of our Elliott wave count as well as a Fibonacci extension of wave 1. That is a move from $2,356 up to the conclusion of $2,536 and begins after what we have labeled as a wave 2 at 2,400, the conclusion of our corrective second wave. A one-to-one relationship between this rally and our current rally would take gold to $2,583. You can see that we have surpassed that. So we've met our first goal as to where we were forecasting wave 3 to go. While we could see gold move much higher than that, I believe that it is unlikely that we will see a major move prior to the FOMC meeting next week, because today's strong move, for the most part, greatly factored a rate cut into current pricing. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.